When you say we hit just about 4 million, just slightly over, and that was down from last year, these are numbers we haven't seen in 30 years, right? I mean, this is significant. Hi, y'all. Welcome back. It is 2025, and we are going to break down all things real estate from 2024. So hang on tight. There's a lot of information to come. And Ruben, thanks for being here. Just like always, we're going to talk about some really important things that happened over time in 2024. What are the things we're going to talk about?
Yeah, so the three things we'll talk about today are, first off, we're going to go over the NAR results. So we'll hear where the totals for 2024 actually ended up. We'll hear a little bit about what happened in December. And then we're going to jump into some consumer trends.
Sure.
And then talk about mortgage rates a little bit, because obviously there's been some changes over the last couple of months.
There definitely has those pesky things, right? So let's start off. Let's talk about those NAR numbers. We have in the full year last year, now that we're doing this here in January. And what did it look like? What did we end up with last year?
Yeah, so we ended the year at 4.06 million existing home sales, which brought us down almost 1% from last year. We thought last year was probably the bottom. It looks like the bottom's a little wider than we thought. So we did see things get just a tiny bit slower this past year.
Sure.
In terms of home prices, we were up 4.5%. So, that speaks to the fact that inventory's still been relatively restrictive, right? We see variance across markets there, but overall tight enough to keep prices going up a little bit faster than we thought. Going into next year, we think that's going to continue to slow down. We're looking at low single digits for the most part, given what the projections we see, but there's a lot of question marks there.
Yeah.
And in terms of inventory, we ended the year at 3.3 months. Typically, December, January is usually kind of the bottom of the market there. So we should start moving up in inventory going forward. Maybe January will still be pretty low. February through April, we see things start to speed up.
Sure. Normal seasonality, right,
Exactly.
is the expectation. So some of the things I heard you say, and I just want to emphasize this for all of our viewers. When you say we hit just about 4 million, just slightly over, and that was down from last year, these are numbers we haven't seen in 30 years, right? I mean, this is significant.
Yeah, these are sales figures, on par with numbers we saw back in the 90s, essentially.
Right. Yeah, and I think if you are a real estate professional, you felt that. If you're a seller, you definitely felt it. The interesting part, and I know we speak to this on occasion, it really mattered what part of the country you were in. Some places have lots of inventory, some places have a lot less. And for example, here in Austin, Texas, we have a lot more than 3.3 months of inventory right now. But the general overarching feeling across the country is we have decent amounts of inventory. We were at some of the lowest sales we've seen in 30 years. And prices were still going up because that inventory wasn't as gluttonous as maybe people thought it would get.
Yeah, we're still dealing with this lock-in effect, or golden handcuffs, you might want to call it,
Right.
all the way across the country. Anyone who has a mortgage on their house right now, or even owns their house outright, if they're looking at buying, they see how good they've got it with their 3% rate.
Right.
They're looking at 7.1% and going, I think I'm going to wait a little while, right?
Sure.
So that's kind of kept inventory off the market. The only thing that solves that is time, and mortgage rates starting to come down a little bit. We are projecting them to come down some this year, but it's not going to be very much. We're still going to see rates probably in the mid sixes for most of the year.
Yeah.
Maybe best case scenario, we start getting down into the low sixes. Right now, it's kind of what it's looking like by the end of the year.
Right.
But for the most part, mid sixes, upper sixes, especially this first half of the year, is going to be pretty normal. And right now we're still above 7. Hopefully, we'll move back below 7 in the next couple of months, and then probably mid to upper sixes.
Yeah, I mean, you've been saying this for a while, right? And I think it's fair to say you've been right. And things have just been slow. So we know that the market sort of hit its bottom. And we talked about this last year. You said, we know we're close. Just how wide is it? That's still a question mark, it sounds like, until we start to see those inventory rates really rise. One of the things I found really interesting, though, because you brought up interest rates, and I know we'll talk a little bit more about it, is how interest rates didn't affect one particular sector of the market, our luxury market, right?
Yeah, that's exactly right. Which also kind of leads us into our consumer section, right?
Sure.
So in terms of luxury, there's some quick stats going to give some perspective there. Listings were up about 27% last year in the luxury space. They were up right around 25% for non-luxury.
Okay.
Looking at sales actually increased almost 14% in luxury, whereas we went backwards 1% in terms of non-luxury sales. So, that shows you that, cash buyers, people in luxury spaces where they're less reliant on financing,
Sure.
are seeing some opportunity. And they're probably also seeing some value right now because prices in the luxury space have also been a little bit flattered. They were up about 2% last year, when you look at the country as a whole, versus the 4.5% that we saw in non-luxury pricing.
Yeah. All of that is so interesting. And you nailed it, right? This part of our sector of our environment, our economy, is very outside of the effects of the mortgage rates, right? Either I have enough money that rate doesn't bother me if I'm going to take out a loan, or I don't even need to, I just paid cash. One of the things I read was that a third of all of the home sales were in cash versus a fourth just a few years ago, which really bodes well for this sort of conversation around wealth. Clearly, people with high net worth who are buying luxury properties. And when we say luxury, we really mean somewhere in the range of either the top 10% of the market or above $1 million. Is that fair to say?
Yeah, exactly. You were mentioning before, we were looking at the NAR survey of home buyers and sellers. The average price of first-time home buyers has gone up.
Yeah.
Some of the familial situations have changed and what the home buyer kind of demographic looks like right now. And a lot of that's probably driven by wealth, right?
Absolutely. One of the things that specifically I saw that really resounded in this conversation is the average age of a buyer last year was 59. That's not just first-time home buyers, that's all buyers. And so there were some interesting stats alongside of that. Because those folks were average age of 59, most people buying homes didn't have children under the age of 18. This all tells us the story we know is true, which is people in family ages, our sort of Gen Zers, millennials, they are having more trouble with the affordability factors going on in the environment with interest rates where they are today.
Yeah, it's a lot more people that are a little older, more financially mature in their lives at this point.
Sure.
And they have more financing options. They have larger down payments or they're going cash entirely. They have less expenses, less debt that they've had time in their life to already pay off in terms of things like cars and stuff like that. So they're just a little bit more flexible in, getting into the market. What they're doing is they see value, right? Like if you're in that cash space, you can go find value right now because you're not competing with as many buyers, right?
That's right. That's right.
I think we saw the first-time home buyer, right, was 38.
First-time homebuyer average was, not only was it up to 38 years old, but the number of first-time homebuyers decreased significantly down to only 24%, where typically it's 32%. So both of those factors really played into, I think, a lot of the numbers you were telling us from NAR.
Yeah, so that really pulls into, again, the mortgage rate conversation, right? So, with where things are right now, given home prices, affordability or payment and income or payment and interest as a percentage of your income is sitting right around 35% right now. That, depending on who you are, that may sound like a lot or not a lot, but in terms of what, banks typically think when they're lending you money, that isn't quite a lot, right?
Right.
So that's limiting, who can borrow right now. Just another reason why we're seeing more mature or financially mature individuals be more active in the housing market.
Sure.
What's driving that? Obviously, we still saw 4.5% price increases, so that's not helping. Right. It's slowed down initially, so it's moving in the right direction. We think we're going to see it slow down a little bit more. The other piece of that, obviously, is interest rates. So August, we had made it down to about 6.5%, but since then, we've kind of steadily moved up, and we're back at 7.1. So what's driving that?
Yeah.
It's a few things. So we've seen, the Fed dropped rates by a full point last year over several meetings. Their last meeting, they kind of indicated they are a little bit more concerned about inflation being a little bit stubborn. So, it's kind of been hovering where it's been at the last couple of months, about 3.5%, I believe, the core CPI figure. It's moved in the right direction, but they're a little concerned it's kind of being a little bit sticky. So word is, their expectation, they're not going to lower rates probably, but maybe 2 times this coming year. And that's if we don't see any other factors, pushing prices up. January, so we've got a meeting coming up. The expectation is not to see any dramatic movements in mortgage rates right now. We expect to see them in the upper sixes for the majority, especially the first half of the year. Hopefully moving down some in the second half of the year. Most likely scenario, we're sitting in the low sixes. Good scenario by the end of the year. Best case scenario, maybe we get a little bit lower into around 6. Worst case scenario, we're going to just kind of hover around, 6.5 plus throughout the year.
So I'm hoping that what you're saying is going to play out. And I know we're all hoping for those things because it is a big deal when we see such a big drop in our first-time home buyers and so many Gen Zers, millennials who want to get into the market right now who just feel like it's not the right time.
Yeah, we'll see affordability adjust eventually, right? Time is just the factor of that we don't know how long.
Sure.
We don't know what's necessarily going to completely drive it, but we'll eventually probably get back. Because I think the historical average is around like 20. It's just below 30%, right? 27,
Right.
25 to 30% is pretty normal. So we'll get back there probably during as mortgage rates come down a bit. We're seeing home prices start to slow. We'll get there.
Yep.
The good news is right now, we've got a lot of luxury buyers. There's some bright spots in the market right now.
Sure.
If you know where to look, right? So
Right.
financially mature individuals, people in the luxury market who are, more cash motivated, and are looking at, the value that's existing there right now where there's more inventory on the market than there has been in a couple of years. Prices aren't up very much. So there's opportunity there, right?
Absolutely. And I think that helps us really close out what we're talking about today, which is what do I do with all of this information, right? How do I take action and or go out and use this information to help educate the consumers I'm working with in the environment to buy, sell, and invest in real estate? So regardless of whether you're a buyer, a seller, or a real estate agent watching this, what you just said is so key. People need to know what's happening, what their situation looks like today, what it would look like if rates changed and or I changed my price point, the location I'm willing to purchase in. All of those things should really be discussed at a high level. You keep saying this and we keep seeing it to be true. Nothing's going to change fast. So if I want to get in the market, I have opportunity to. I just need to know very clearly what are my options, how much should my down payment be, what makes this more affordable for my income bracket and the area I want to live in. And we need to seek out a professional to help us and guide us through those conversations, a professional lender and a professional real estate agent.
Yeah, absolutely.
Yeah. Well, the other thing I heard you say there too that I think is so important is for those of us in the market and our real estate agents, your conversations about go talk to your folks who are in that sort of different period in their life and wealth and have more opportunities. We also are hearing all of this talk about these $84 trillion worth of monies that are in the baby boomer generation that will be trickling its way into other generations. And so all those conversations can lead people today into what does the future look like. We just have to go out there and have the conversation, right?
Yeah, absolutely. People are, especially right now, given it, the housing market situation is challenging, they're thinking in those terms, right? Like, what does the future look like? So being able to get in front of them, have that conversation of like, what are your options? What do you want? How are you going to finance it? What changes for you if mortgage rates actually do change or don't change? And be able to give them the realistic perspective of like the pace at which that's likely to happen, which is slow, right?
It is slow.
But they don't necessarily know that. They're just waiting. So there's a ton of opportunity to get out and educate people right now.
Thank you, Ruben, as always, for bringing us such great information. As a consumer and a real estate agent, this is invaluable to me. And I hope, and we hope that it was invaluable to you. You are not going to want to miss next month, though. Next month is when we do Gary Keller's vision speech. He's going to be talking about all things, what does 2025 look like for the real estate industry? And Ruben will be on stage with him, and we will get to talk after about all the things that he says and what's coming up for all of us. So don't miss a minute and tune in next month.